Okay, good afternoon, gentlemen. This is the second time we are hosting the discussions. Of course, first time for the on the official front, where CMA has mandated that we should have it half yearly once to discuss the half yearly financials. Welcome to the session, gentlemen and ladies. In fact, we do not have any presentation as such. We will straight away have an open house where any one of you have any queries or any clarifications and any questions will be free to do that. So I now open the floor to them.
Yeah, good afternoon, gentlemen. This is Anup from SECO.
Good afternoon,
Thanks for
Anup.
thanks so much for hosting this call. Just if you could please run us through your expansion plans and what stage are they at right now, and also on whether you have fuel commitments for fuel supply arrangements for these capacities, and what sort of pricing should we model for the fuel that you will be receiving for these capacities.
Okay, thank you, Anup. Something you will take it or I'll.
You
Okay,
please.
fine. Okay, thank you, Anup. Thank you for your question. In fact, as already disclosed in our chairman's report, the expansion has going on schedule, or rather we had fallen behind by a few weeks, but then it is going on now, and then we should be starting our capacities, or rather starting our what do you call our trials in the next coming weeks, or rather in a couple of weeks. Okay, so there should be those capacities. We will start raking it up, or rather increasing our the numbers. And by year end or by beginning of next year, we should be able to achieve full capacity in that plant. And as far as your other point on the gas availability, in fact, gas and electricity all are in place, and then there is no changes in the pricing as such. It will be at the same pricing which we have been enjoying over the last few years. So there is no concern on that front.
Yeah, thank you. How are the regional pricing dynamics right now? Because one would assume that with what we are seeing on the energy price front across the globe, especially in Europe and even in China, is that putting some sort of a floor, or is it sort of lifting the price of tiles, or is the industry being encumbered with excess supply from overseas? Because somehow when we look at the earnings of companies, yours, I mean, Anwar and your competitors, we don't see that sort of a price lift that we would have expected when energy prices are so high. Is usually the transmission mechanism, much longer than like a year or two? Or I mean, your views on that. How are the pricing dynamics right now? Where do you see pricing maybe in the next couple of months? Do you see any demand drivers that are emerging, and how is energy shaping up in that pricing environment?
I'll take that, Suresh.
Yeah, please.
Yeah, I think as far as pricing is concerned, we haven't had a very big increase in the energy prices, first of all, in this part of the world, unlike in India or indeed in Europe. So we've been insulated from that. We've had the regular inflationary pressures across some of our input materials. And as you mentioned, there is a time lag before that gets reflected in the prices. We have already started pushing up our prices, so you will see an increase in our realizations. And largely in a manner that our margins are kind of intact, which means despite whatever price increases are there in our input prices, our price increases are essentially designed to ensure that we are able to maintain the margins, and that's exactly what we are doing. So you will find an increase in the prices, I think, as we go along. I think that's already started. In terms of the overall outlook in the region, we were much better placed a while ago when we had the anti-dumping duty enforced in both UAE and in Saudi Arabia. And that's the reason why I think the whole industry was looking up in terms of both pricing and profitability. But at the moment, UAE has gone back on that, and they have repealed the implementation of the anti-dumping duty, which means that leaves only Saudi Arabia, really speaking. And there again, we have issues with the new customs duty that they have introduced, which of course is refundable, but then that's kind of created a bit of a logjam on the logistics front. So prices are higher than what it was, let's say, same time last year, mainly due to inflation. And but it's a little less, it's a little subdued at the moment for the reasons that I mentioned, which is that some of the markets where we thought we could have an uptake, that is not quite playing according to what we had originally envisaged. Yeah.
Hello.
Yeah.
Yeah.
Hi. Yeah. Hi. This is Joyce Matthew from United Securities. Thank you,
hi,
gentlemen,
Joyce.
for the call. See, you said your first phase of expansion will be coming up and running in next couple of weeks. Are there any updates on the second phase of expansion which is announced earlier? Is it running parallelly? Are we on track for attaining the completion and commissioning by first quarter, second quarter next year?
No, it won't be that fast, because I think the first one, as Suresh mentioned briefly, we've had a bit of delay on that. If it had gone according to plan, we would have had 2 quarters of production from the first expansion in this financial year. At this point, it looks like we will have 1 full quarter of production almost from the first expansion. Yes. Which I think the trial production has just started. So September, we kind of stabilize. So we should have a reasonably good last quarter with almost full output coming in from the new facility. As far as the second facility is concerned, normally we go in for a new facility after we complete one. In this case, because the demand was pretty strong, especially with both UAE and Saudi Arabia having implemented the anti-dumping duty, as I mentioned earlier, we decided to prepone it a little bit. But given the fact that we have these, let's say, issues in both these markets, we have decided that we will do it after completion of this project. So it is going in parallel in that sense. We have almost finalized the techno-commercial aspects, and we should be ready to sign the contract. The shed and everything is ready. So here, as we had mentioned earlier, the implementation will be much quicker, because it's just the plant has to be bought and put in. Whereas in the first one, it was almost a green field where we had to put in a very large civil shed, which normally houses 2 plants. So all that work is done. So we will wait for a little more clarity on what is happening in Saudi Arabia, particularly, before we kind of go ahead with it. But at the moment, it is on. And we will be able to commit, let's say, a more clearer timetable in terms of commissioning, maybe by the end of the next quarter.
Understood.
Yeah.
Thank you. Wish you all the best.
Welcome.
Thank you.
Hi, good afternoon, gentlemen. This is Samir from EFG Hermes.
Yes, Samir, good afternoon.
Yeah, good afternoon.
And just a follow-up question on that. You mentioned about some logjam in Saudi Arabia.
Yeah.
So could you give some more color on that? What's really happening there?
Yeah, what's happening in Saudi Arabia is actually pretty strange, because despite the fact that we have a free trade agreement within the GCC, and that's what has been enforced all along, lately they have come up with a rule which I'm told is mainly to block some of the imports coming in from UAE, where they've had different issues. I won't go into the details of that. But what they've effectively done is that even if you are a GCC manufacturer and you're sending your goods to Saudi Arabia, the dealer will have to pay a 12% customs duty in order to clear the consignment. And this is not only for tiles, it's for, I think, across all the product groups at the moment. which the dealer can claim back from the authorities after submitting a set of documents, the usual country of origin, what have you. You know, there is a bit of bureaucratic forms that are involved in that. This has already been enforced now, I think, for about a month and a half. And some of the dealers, or many of the dealers who have cleared the consignments, haven't yet got the refund. So that is a bit of a concern with them. It just blocks up their money, and it makes the local production a little more attractive till this issue is resolved. So I'm not sure what the government of Oman is doing about it. But our expectation is that it will get resolved. It can't be a permanent feature. And even if they don't revoke the duty, as long as the refund mechanism kicks in and people get that, then I think a kind of a steady state will set in on that front. So that is the issue in Saudi Arabia.
Okay, understood. But as per my understanding, this customs duty is ineffective since the last quarter of 2021, right? So is this something new that's kicked in?
No, this is new. This is new. This is, I think, 2 months, Suraj?
Yeah, this they introduced it from end of June onwards. Yes.
Mm-hmm.
Okay, so you haven't expensed this into your accounts yet, right?
So this has to be paid by the buyer. It's not to the account of the seller.
Okay.
Yeah.
So, and it is refundable. So theoretically speaking, it has no impact on the selling price of the product. What it is causing is that the dealers are getting a little, jumpy about it, because they pay the money and then you have to go to the government with all these forms and get a refund. And once that system falls into place, there will be a little more comfort. But till then, I think there is some disruption in that. So we are finding that many of the dealers are struggling with that right now.
Okay. In that case, do you think if this to sustain, do you think you may have to give an additional discount to these distributors, or in case if they couldn't pass this to the consumer?
No, this will not have to be passed to the consumer, as I mentioned, because this will eventually come back from the government. So at the moment, we are not seeing any change in the selling prices. Life goes on largely the way it is. It's just that there is a bit of reluctance from some of the dealers to commit to it, because they're scared that their money will get stuck with the government and they'll have to spend more time. It's that aspect which is at the moment dominant. So we are also waiting to see how it plays out. We've also spoken with the government, and I mean, they tell us that it will get resolved, but at the moment we're not quite sure how this is going to play out. Yeah, so that's one of the concerns. Yeah.
Understood. Another question is, you mentioned about during the expansion phase that you are looking to move into higher end products in your new capacity.
Yes.
So how do you think its pricing, how that's going to impact the margins?
Well, when we say it's not a very big difference, in the sense essentially the products are largely the same. In our industry, the prices move up a little bit when you have a large format tile. So we are, because that entails some changes in the process. You need a slightly bigger press and the associated equipment and things like that. So we will. The bulk of the production would still be dominated by the sizes that are obtaining now. But let's say, I'm just giving an approximate number, but it's fair to expect that, let's say, in the next financial year, we could get maybe 7-8% of our production coming from these so-called larger sizes, which may give us 10 to 15% higher realization, let's say. So it's not a very big deal, but then it does help us to push up our margins in the markets where we are able to find an acceptance for this.
Thank you. One last question from my side.
Yes, please.
How is the demand outlook for Oman market, and which?
Oman is very good. We're continuing to do very well here. We're very satisfied with the demand here and the order inflow, everything is excellent, I would say. Oman is still the key market for us, and we're very satisfied with what we see here.
And which segments are you expecting? Is it housing or infra-related projects which is giving?
It's still largely housing from the way we see it, because the bulk of the business is coming from the dealer end, the retail end of the business across the country. So I would imagine housing and refurbishment, both these I think are reasonably strong. Yes.
Understood. Thank you so much, Shamsuddin and Suresh.
One question to you, Samir. I'm surprised that you haven't heard this about this customs duty from any of the other companies. Is it not an issue with them, particularly those who are manufacturing and selling outside Oman?
Like Rock Ceramic, they have this issue, and they are paying a 12% customs duty in Saudi from fourth quarter of 2021 onwards, and they are expensing it as well.
What about manufacturers in Oman? And I'm not talking about tile manufacturers, even people who are exporting oil or marble or of course, some of them are not public limited companies, I think, but some of them would be. I would have thought that it is a more top of mind issue with the analysts and everybody, but it doesn't seem to be. So I was just wondering whether we are more affected than the others.
No, Shamsuddin, actually, I haven't come across any such news from other players. Yeah.
Okay. All right. Okay, thanks.
Thanks so much.
I think somebody's put a hand up, please.
Yeah, Abbas. Abbas and
good
maybe
afternoon.
Abbas, yes.
Good afternoon, Mr. Suresh. Good afternoon, Mr. Shamsuddin. It's good to see you.
Good afternoon.
Good afternoon.
Just a quick question. I mean, you mentioned the withdrawal of anti-dumping duty in the UAE. You spoke about the customs in Saudi in detail. So how does a company who has the pretty reasonable exposure to both these markets, I mean, of course, you wish for the best when it comes to Saudi, but let's say this issue goes on for another year. What sort of contingency plans do you make as an organization to sort of make sure that your revenue run rate is and your utilization levels remain where they are? I mean, what's your contingency plan for this, assuming this goes on for another year or so?
Well, I think the way to answer the question would be that 2 months ago we were looking at another plant, for example, in order to meet the demand. So one would be, if we find that this situation is not improving or indeed affecting us very severely, the first step would be to delay the next step. So we are left with one plant to deal with, on which we don't see a problem at all currently. Even the order inflow with the reduced flow from Saudi Arabia is adequate to meet that, because we must bear in mind that we are adding this line now after, I think, 7 or 8 years. So we've had there's been a significant time between the last line and this line. And we've got new markets now. For example, we are finding very good response from Yemen, where I think the dust has settled down. And we are one of the markets which is, in terms of proximity and access, we can deal with that market very well compared to any of our competitors. So there's a huge demand increase in Yemen, where the prices are also very good. Similarly, we've got markets like Jordan. And the growth in Oman, and even the organic growth in the other markets where we are operating, considering we haven't had a capacity increase for some time. So the answer to your question would be that if you're going to have only one line in place, and that decision, as I said, will firm up by the end of next quarter, we don't see any major concern on that count. And if, for example, if we had gone in with both the lines, then we would have to be looking at a contingency plan. But at the moment, I think with the current level of capacity, we are comfortable. Abbas,
that's a relief. That's a relief to hear. So you could maintain both utilization and realization at the current levels without any issue in the current scenario. I mean, is that fair to say?
That's right. That's our view at the moment. Yeah.
Okay, that's good news. That's good news. And then hopefully things will, thinner heads will prevail, and because at the end of the day we are a part of a customs union. So it makes no sense to me when there are these barriers.
Yeah, I can't see them doing this for a very long time without something changing. So I'm hoping it will pass.
Okay.
Yeah.
And when it comes to the
We can't hear you.
Yeah, Abbas, I think we have lost you. I think we have lost Abbas. Anybody else? Any other questions from anybody else? Yes.
Nasir?
Yes.
Yeah.
Assalamu alaikum wa rahmatullahi wa barakatuh. My question is, what is the reason for the decline in the second quarter profit? It was 1.5 million, whereas in the first quarter, it was about 2 million. Can you hear my sound? Is it clear?
Suresh,
what is the reason?
Uh,
What is the reason for the decline in the profit from 2 million in the first quarter to 1.5 million in the second quarter?
Those numbers are not correct, I think.
Yeah, let me just recheck what your numbers, what you have been telling me. Give me a minute. Yeah. So, the first quarter profits was 1 point. If you see the profit after tax, okay, we are looking at 1.535 to it has gone up to about 1.483. So I am not able to understand from 2 million is what you are saying. Which number are you looking at? Yeah.
Yes. For a first quarter, first quarter, it was about 1.95, I think. Yeah, 1.95. The profit after tax.
After tax.
After tax. And in the second quarter, the profit is, I think, maybe 1.5 something after tax also. So the total is 3.5, I think, for the half.
Yeah, 3.5 after tax. That's right. Yes.
Yes.
See, basically, yes. Okay, fine. If you are referring to that, I can
yes.
I can just clarify to you. See, always if you see, compare it with our first quarter of the previous year. Okay, so quarter on quarter of previous year we have grown. Similarly, second quarter as compared to the second quarter of last year we have grown. Okay.
Yes.
Having said, yeah.
But so here, sorry, but I mean here. Compared to the first quarter. The first quarter was about 1.95. The second quarter is about 1.5 something, I think. So, okay. My question, what is the reason for the decline?
That is every year, that is the seasonality. When you have the Ramadan coming in and then you have the entire month of Ramadan and Eid coming in, those quarters always traditionally, if you go back to the last 10 years, you will traditionally you will see that there is a dip during those quarters.
Plus the cost
in the region.
Suresh,
yeah.
Some of the electricity and everything goes up.
The cost factor is not the cost factor. The other reason is the decrease in the other income on the investment income, basically. Yeah.
Okay.
Well, I think just to summarize, Nazir, there isn't anything which is worth reporting in between the first and second quarter, except that there's a bit of a seasonality every time. And the other income has perhaps reduced. Apart from that, I don't think there's anything that we have to mention.
Okay.
Yeah. Samir, you wanted to ask something else?
Yeah, one more question on the competition side. So how's the imports from India and China happening to this region? Especially after the local producers' prices also increased. So at this pricing, do you think you could expect more competition from the Indian market?
Well, as far as China is concerned, as we mentioned before, in the ceramics area, they're not even present today, unlike in the past. So essentially, it's the competition from India, which, if anything, has dulled a bit over the I think, last year, mainly because, of course, even apart from the anti-dumping duty, Oman doesn't have the anti-dumping duty, but they've had, I think, significant increases in their price. I mentioned about energy. While we are reasonably insulated from that, they've had huge increases in their energy prices. And overall, I think there is the inflationary impact in India as well. So they're not as fiercely competitive as they used to be. That said, they continue to, let's say, import into these markets, but we are talking about the intensity of competition from India. I would say today it is more diminished than it was, let's say, 2 years ago. And we haven't taken price increases which are very significant, which are going to provide an umbrella.
And added to that, in fact,
it's a very strict interpretation of
Suresh, your voice
You're not coming
was
through
breaking.
clearly. I think there's something wrong with your audio. So maybe, I don't know whether you need to put it
and
off.
added to what Mr. Shamsuddin said, the sea freight also has not still eased. So
Suresh,
it is still pretty high, and then that is also still a barrier.
yeah, Suresh, I think your sound is not coming
Hello.
clearly.
Are you able
So
to hear?
you can just maybe put it off.
I'll leave and I'll come back.
Yeah, and then see, please.
Yeah, that's what I'll leave and come back.
Yeah. Anything else, Samir?
Yeah, I think basically that's the question I have. And I think Suresh was adding like the freight charges.
Yeah, absolutely.
As
That's
well.
another valid point. The freight has also kind of gone up significantly. So that again renders imports a little more problematic. So that threat, if one were to summarize, is diminishing, I would say.
Understood. And how do you think the new capacity coming up in this region? How do you see that competition from the regional producers?
Any new capacity, except in Saudi Arabia, there are additions to capacity, but then that's a large market by itself. And going forward, that will have a bearing, I'm sure. But apart from that, I'm not aware of any other new capacities worth talking about. Which one did you have in mind, Sunny?
I know the one, the Chinese producer setting up in Saudi. I think they've done it 2 years back. Then new.
Yeah.
There are.
But that is a very large market, and which was served in very large quantities from India. So with the anti-dumping duty coming in, even if a couple of factories were to come in, it doesn't change the situation considerably. So they're on a roll now because the anti-dumping duty is in place, and I think at one point maybe a third or more of that market was serviced entirely by Indian imports. So you take away something like that, it creates a huge vacuum. So they're just filling that in. So I don't see that impacting us at this point in time in any significant manner. Apart from that, as I mentioned, in other parts of the GCC, I'm not aware of any capacity additions.
One more thing to a point to be added, Samir, here is, if you see, there is a growth demand also in Saudi now. See, all this during the pandemic time, it was only because of the anti-dumping we had a substitute demand of from imports. Whereas now we have a growth demand as Jeddah, for example, the city of Jeddah, almost 25 to 40% is being demolished and then is being rebuilt. So there is a huge growth demand also in the country there now. So that is whatever additional capacity is coming into the region there or in the country there is only going to partly supply, whereas still there's going to be a demand supply gap for us to be a very major player there.
Understood.
Okay. Abbas, back to you. I think I can see your hand up.
Yes, sorry, I dropped off. So I had a couple of questions, sir. One of them is, given that UAE withdrew the anti-dumping duty, how competitive is Anwar Ceramic compared to, let's say, some of the guys who've come back into the market thanks to this withdrawal of anti-dumping duty? And a follow-up question to that is, given all that we know right now in terms of the Saudi custom duty and the UAE withdrawal of anti-dumping duty, what sort of geographical mix are you looking at in terms of sales in the next year or so?
I didn't get the first part of your question. What was that?
So I was asking about, once the UAE anti-dumping duty was withdrawn, how did you see competition react, and what impact did it have on your selling prices and your quantities in the UAE region?
No, so in UAE, basically, we go back to what it was before the anti-dumping duty. We had a certain market there when the Indians and the Chinese were present. We've been in that market for very many years. So we go back to the same level of volumes and prices, which is obviously less than what we had expected when the duty came in. But UAE has always been a fairly small market for us because it's not a very large retail market. I think we mentioned this point before. It's a very concentrated, institutionally driven market. So our volumes and our dependence on that market was always limited. So we go back to where we were. So it isn't it's not a game changer in any real fashion. If you're talking about the revised mix after the anti-dumping duty being withdrawn from UAE, I mentioned it briefly about Yemen taking a more, let's say, prominent place in the list of markets that we would be looking at, and Jordan to some extent. Apart from, let's say, greater penetration in Oman and the markets where we already have a strong presence. Suresh, you wanted to add something?
In UAE, to add to that is that, predominantly UAE is a porcelain market. The ceramic market is very limited. To that extent, the impact on the revoking of anti-dumping is not too high for us.
Okay. And in terms of sales mix, like Oman would be what percentage of sales once the new line sort of comes on stream? Are you looking at 40% Oman? Is it going to be a higher number in Oman?
What is Oman today, Suresh?
We will be in the same range on the Oman market. We are between about 30 to 40%, and we will be continuing to be in that range.
Okay. Okay. And my second question is, do you see any risk of any other cost inflation when it comes to, especially on the energy side, electricity or gas? Do you feel like, is there any communication from the government, any intention to raise prices? I mean, I know there's an inflation. Nothing. So you don't see that as a risk at all?
Not at all. Not at all.
At the moment, we haven't heard anything, so we just hope it stays that way. Yeah.
Okay. Fair enough. And my last question is, how do you react to Al Hail's acquisition by Al Maha? Simply because more from the porcelain side, I understand that Al Hail plant in Sur is, obviously is big on porcelain when it comes to porcelain manufacturing capacity, and that's the market that's been growing in the GCC. Is that something Anwar Ceramic has ever considered getting, another line on the porcelain side, and if not, why have you consciously stayed away from this product?
Yeah, I think the arguments are the same, which I think we've been through many times before, which is that our view is that in this industry, if we have to get a dominant position and remain profitable, we've got to be a low-cost producer, which is largely driven by the fact that we can use local raw materials in the mix. I think that is very important in the cost built up. As far as porcelain is concerned, every time we look at it, and we have obviously looked at it, it is a significant part of the market. We don't see the numbers quite adding up, because if the bulk of the material, all the clays are going to come in and it's going to be imported, we don't see then what is it that would make manufacturing here more competitive than, let's say, places like India or anywhere else. And unfortunately, we don't get to see the profitability of porcelain manufacturers separately. I think it's clubbed together. But I would imagine that if we looked at just what people are making from porcelain tiles in this region, they would be making much less than what they would be doing from ceramics. That's not supported by an analysis, but that's just what I feel about when I look at the costs that are there today.
Okay, that's helpful. Thank you. Thank you for that.
Yeah.
Great. That's all I had. All the best.
Okay. Thank you, Abbas.
Okay. Thank you, Abbas. Thank you. Yeah, I think Nasser, I think you have one more. Any more questions? I think your hands up. Yeah. Samir also is, I think, yeah.
Yes, maybe one question.
Yeah.
Maybe someone asked before, I don't know, when the production will start from the extension, the new extension, when it will start?
It'll be available in the last quarter of this year. So
in the market.
Yeah, we are starting the trial production maybe in the next 10 days. And the September will go towards kind of stabilizing that. And from October onwards, we will have a saleable output from the new facility.
Okay, thank you. Regarding the anti-dumping, regarding the anti-dumping, is it effective in Qatar and Kuwait also? Kuwait and Qatar and Oman? Is it effective or not?
No, it's not.
It's not.
At the moment, it's only effective in Saudi Arabia.
Okay. Yeah. Thank you.
Thank you. I think
Vishen, I think you have some questions.
Hi, good afternoon, gentlemen. Thank you for answering our questions patiently. Just a quick one.
Yeah.
We've discussed a few changes in the operating environment with regards to, UAE repealing the anti-dumping duty as well as this 12%. What we hope is a temporary impact on imports in Saudi. Given all these factors, where do you see margins, in the short term and going forward? What kind of impact do you expect on margins, or do you foresee margins remaining constant because utilization, realization levels are where they are, and sort of then compensating for UAE and some of the other markets with Yemen, etc.? Could you just, shed some light on that, please?
Yeah, I think at this point in time, our view is that our margins will remain intact. We touched upon that briefly in the sense that the organic growth in our existing markets itself has been kind of supporting our order book over the last 1 or 2 years, and that's what prompted us into this. In addition to that, there are new markets available in our neighborhood where I think there's huge potential available for growth as well there. So while the problem in Saudi is there, and even if it were to remain, we see ourselves being able to navigate that without any, let's say, significant impact on our operating margins.
All right, pleased to hear that. Second is with regards to Yemen. I mean, post-conflict or once the dust settles down, we all understand it's a huge market for the infrastructure space and for the material space.
Yes.
What kind of market share, or sort of, let me put it this way, what kind of sales mix do you see in Yemen once things stabilize, say FY 23 and 24 and onwards? And what percentage is it currently?
Well, I think it would be tough to, let's say, answer that question, let's say, in an accurate manner, simply because we haven't been even visiting those markets. With all the trouble there, we haven't gone there. We haven't even got a first-hand assessment of what is really going on. What we have is, we have dealers who have been with us for many years. I think maybe for the last 2 decades, we have two dealers in Yemen who've been buying from us. So they come here, and that's how the interactions typically take place. And they've been buying larger quantities. We've had expressions of interest from many dealers there who want to, and who have indeed started visiting us, and we have just commenced supplies with them. So I think what we will do now is we intend to visit the market now I think this month or early next month. Our people are going there. We will take a look at what is there, because that market is going to be important for us in the medium term. So in terms of what we can expect to get from there and how much Yemen will account for in the overall market mix, I think is a question maybe we can answer the next time. At this time, we can say that we are very hopeful of that market being a big player for us. Yeah.
Understood. Makes sense. Thank you. You've touched upon this. We've discussed this, but could you just kindly remind me, what was the reason for the delay in going operational on the new line? You've given us the timelines where you've said probably September is when you expected to mobilize, and Q4 should be the first quarter, or at least most of it should be the first quarter of full production. What was the reason for the delay in going operational?
I think the main reasons, one is we had to first of all acquire a piece of land which was adjacent to our existing factory. We didn't have the place in the current premises. Now that meant there was and we need pretty large amounts of land to set up a tile factory. So there was another company there which was, I think, folding up. That process of acquisition took a little more time than we thought, with all the legal issues involved and the financial settlement, etc. So, which means we lost some time off the starting block itself. And in addition to that, the problems of COVID, which means many Italian technicians couldn't come on time, the problems of logistics, which meant that just straightforward consignments from Italy, which would normally reach in 3 weeks' time, sometimes took 3 months to arrive, and availability of electronic spare parts, which has plagued production lines the world over. All these issues, I think, we were hit with. So I think that's the reason why we lost 3-4 months. But as I said, now it's all largely done. We're just going to now get started. We've lost 3 months, but we hope to make it up as we go forward.
That makes sense. And in a way, do you think it actually also helped you, because had this completed on time 4 months back, you probably would have started the second line of expansion? So do you think that in a way is a blessing in disguise, just to get your opinion?
No, I think the second line is also a matter of time. I'm sure we're going to do that because the fact is the markets are growing. There is demand. If you look at the big indicators, which is imports from the East, that is diminishing, and that will continue to diminish. What happened with China will happen with India as well. When the costs go up and when the domestic markets are strong, they will not be able to compete, especially at the kind of prices that is going on, which means in a steady state situation, the real competition in these parts will largely be from the local manufacturers. And as long as you're geared to compete with them on price, quality, and market delivery, there's always going to be an opportunity for us to grow the business.
Understood. My last question is, with regards to Saudi, we understand, it's clearly the largest market in the region. It's a growing market. Organic growth is there. Demand, it looks extremely strong. You mentioned about sort of refurbishment, etc. Now, are there any aspirations or any plans to sort of open a direct factory in Saudi, given the size of the market, given that it eliminates a lot of sort of issues which might crop up from time to time in terms of freight, in terms of this import duty, and purely because that's a market that is it's a major market for you. So any such plans, acquisition, setting up base over there? Have you considered that?
Well, I think first of all, the issue that you mentioned about customs duty, we are hoping that is obviously a temporary one. There is a huge agreement between the GCC countries, which is the bedrock, I think, of their commercial arrangements about free flow of goods, tariff-free flow. So I'm sure that's going to come back. The second is the freight to Saudi Arabia has never been a deterrent. For example, we've got the new road to Saudi Arabia. A lot of material goes by road, which has shrunk the distances. So that again is not a major issue. So that said, there would have been a reason, rationale, let's say, for putting up a plant in Saudi Arabia. I must admit, we have talked about it, although we haven't really discussed it in any great detail. But then again, there are issues of doing business in Saudi Arabia. There are problems with that. For example, Saudiization is a huge challenge there, and one will have to deal with that. And you also have, I think, a mechanism, a government mechanism, which again, we don't know too much about that. So, I mean, a very broad look at it, we came to the conclusion this is not something we can, afford to get entangled in. We are okay. Just
to add to that, see, our fixed cost component, which can be apportioned over a larger volumes if we are able to do it in Oman, which will more than compensate the increase in the freight cost, which you have been mentioning. So to that extent, the advantages of having a single location as of now for the volumes which we are producing makes sense if we are in a one contiguous area in Oman itself.
Noted, gentlemen. Thank you so much. That's it for now. Wish you all the best.
Okay, thank you all. Any other questions?
Yeah.
Yes, please. What is the percentage of your selling in Saudi Arabia? Maybe someone asked this question. I joined recently only. What is the percentage? What is the percentage in Saudi Arabia?
The volumes basically is your question. I think you are asking is what volumes we are selling in Saudi Arabia for total volumes. Okay.
Yes.
So presently we are in the range of about anywhere between 25 to 30%.
Okay. And do you see increase in demand or decrease? I mean, during this time, is it increasing the demand or
it is increasing?
It is
increasing, yes. And we expect it to increase as we go forward, except for this issue of this duty that we mentioned. If we leave that aside, it's a market where we see real opportunities for growth, yes.
And also now there is a new road. There is a new road connecting between Oman and Saudi Arabia. So maybe this will give you more chance to increase your volume.
That's right.
That's right.
That's right.
Okay, thank you.
Okay. Thank you, everybody.
Sorry, one last question. So sorry about this. Purely academic in nature, just got me intrigued. You mentioned Oman accounts for approximately 40% of sales. Saudi Arabia is 25 to 30%. That's 70%. Now, UAE is not a big market. The balance, if you could just, in numbers, where does that come from?
Yeah, all the other markets put together. UAE, Yemen, Jordan, Qatar, Bahrain, Kuwait, all put together, forms the balance volume.
And just to understand, none of these markets, barring Saudi, has anti-dumping. So we're very comfortable. So, I mean, what I'm trying to imply here is that on a business as usual basis, you continue to maintain this 25 to 30% sale to these markets because nothing has changed in the first place. So going forward, it shouldn't be a deterrent for you.
No, it should be. In fact, we should be able to increase our volumes there because we didn't have the capacities now. So once with the new capacity coming in fact, we will have an opportunity to increase the volumes there. Basically, because in the conversation earlier, I got cut off where I was trying to explain that the freight cost from India also is still prohibitive. So which is making it not very lucrative for the other markets like Kuwait, Qatar and Kuwait and all to import from India too. So we have a still advantage there and where I think we should be able to get in more volumes once our new capacities come in.
Noted. And just one last parting thought from your side. I know it's a complete management decision. We understand that as investors. But we've noticed the dividend payout ratio, and we've noticed the dividend that the company has sort of paid out in the last couple of years, and that you would continue to link it with free cash flow. I understand it's a capex here, but effectively whatever is left over is that something we can expect the trend to continue going forward?
I would imagine yes. I don't see. I mean, in the sense I can't speak for the board, but I don't see any reason why there should be any change in that thinking.
And even if there is a change, it will be temporary because when we are looking at the next phase expansion, the investment for it may have to be, from some internal accruals as well as, borrowings if need be. So depending on how we move ahead on our next expansion, might be just a 1 year, window, which may have an impact on the payout thing. So otherwise, again, as Mr. Shamsuddin said, it's the board's prerogative to see what the payout can be.
Fair enough. Thank you so much, gentlemen.
Okay, thank you all. Thank you for attending and have a good day.
Thank you. Thank you all.